Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here, and I've just finished doing my trading, looking at the markets today and doing all my scans and my analysis and looking at what's happening right now. And there's a lot of worrisome things out there right now, guys, that I want to share with you today. That is just not looking good. I want to talk about Apple. I'm going to talk about something. There's a graph here that I'm just like, oh my goodness, this on top of this. Oh, that is just, if this doesn't worry you, I don't know what will. And that's what I want to share with you today. And there's just a lot of things that I want to cover with you guys today that I really believe you're going to get a lot of value out of today. So before I start, guys, make sure you go to johnsflashstyle.com if you need help with your trading. If you're looking for chart reading strategies, trading systems, mindset, some final steps, some help just to help you get ahead in the markets, then my breakthrough trading course, only $7 flashstyle. So if you go to johnsflashstyle.com, go to johnsflashstyle.com right now, grab $7 trading course. And I guarantee you're going to absolutely love what's in there. If you just need some form of if you're struggling right now, you need something to get ahead, then go to johnsflashstyle.com, grab that $7 trading course. Now, what I want to start with first is the markets pretty much did nothing, right? So this is up the top here, right here. Let me just do this in a blue, right? So right here is pretty much the S&P 500, pretty much nothing going on. Breakdown. Sideways movement, not much going on. Same for the S&P 500, bit of a sideways, not much going on. And the Nasdaq eked out a bit of a double top, which is a bit of worrisome for me personally. Or not worrisome, but it eked out a bit of a double top. It's really crazy to see what's happening here with that, because with Nasdaq, because I'm actually overall, if I go to my charts here, and if I bring up Apple, right, I'm actually starting to become more and more bearish right now where Apple is. Firstly, because we're so overstretched to the upside. But not only that, when it comes to Apple itself, just massive V bottom. So expect a very nice pullback out of Apple. But not only that, but if I bring up my good old, let me just bring up this here, right? Let me bring up this page through here. This one right here, right? So you can see what's happened right now with Apple, which is, guys, this is a warning sign, okay? This is not nothing else. And if you think the virus is, we're going to slowly dwindle down, it's not going to come back, guys, we haven't seen nothing yet, okay? It's going to come back, and it's going to come back with a vengeance. You think the first time was bad? Wait for the second time. Now, I don't know if the second time is going to be really bad. I know I just contradicted myself just then, but what I'm trying to say is that it's not gone, right? This whole year is going to be about it coming back, it going, it coming back, it going, okay? Look at this here. Dow gives up early gains as Apple says it's reclosing stores, and who says that word, right, has entered a new dangerous phase. Really? Wow. This one right here. Dow slips as Apple stores closure sparks economy. Let's actually, what was that? Yeah, so basically that's what I want to share. I was like, hang on a minute. Apple stores are actually closing now. They're closing back up again in America. I think it was US stocks gain. What is this here? Friday afternoon, as World Health Organization signaled that the pandemic is entering a new phase after Apple said it was reclosing nearly a dozen stores due to the rise of that word, yeah, highlights that the epidemic may be intensifying in places, threatening of a hope for a quick rebound. So, it's as you can see, right? So now Apple's starting to reclose its stores, right? So not only is Apple very overextended, but if Apple looks like it's probably going to start to top out soon, because we have just gone through a massive. If I go back to its chart again, if I bring up this chart here, just a very blank chart. If you want to know if Apple's overextended, just look what happened last time here. Okay, look at this here. Bam, 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 and then look what happened here, right? Bam, 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 bam. Right, look at that there. If that's not a bubble, that's not a V bottom, that's a V bubble, right? So at least a 50 to 60% pullback out of Apple, I expect to come soon. It may continue up a little bit higher, guys, but Apple's one of those stocks, guys, that it just doesn't make sense to be in now. Now, I actually personally did. I bought Apple down through, I think it was this bar right here, right? To be exact, it was actually on this day right here. I waited for what I did do. Let me just draw some trend lines. So what I did is I waited for a channel break of this level through here. And once this is my longer term support line, once it actually broke this level through here, I actually personally went long with Apple right there on this update here. And then I wrote it up and then I got out of Apple around about here somewhere and they continued up. So, but that actually gave me close to a 250% return on my option, right? So I did well out of Apple, but right now there's no way I'm buying Apple, right? Now that was an option trade, by the way, guys. That was an option trade that I did there on the crash, right? So I did really well when the market crashed. That one there. I also actually bought the SPY as well too. I bought the SPY. Come on. Software is not updating. There we go. Right. I also bought a little bit of a SPY, I bought a little bit of SPY here. That basically got out at break even, and then I think it was this day right here. Right there was when the whole pandemic stuff happened. Trump national emergency, all that sort of stuff, shut down. So then I went long SPY there. So I did really well out of that as well too. But get back to Apple now. Let's go back to Apple here. And Apple, as I said before, Apple AAPL. Apple is definitely well overextended, and if we can start to see a bit more of a, if we start to see a drop down, we as you can see here, right, we had this sort of level through here. Look at this here, right? So that's that level through there, I would say. So as you can see, right, look at this here, bouncing up. Look at this here, rejection to the other side. On a short-term basis, we're creating like a bit of a double top formation. So if this holds here and then we start to break sort of this level through here, then I see at least a 50% retracement out of Apple. Now again, guys, this may not happen straight away. We may continue up from here, but I definitely see Apple probably back down towards at least this level through here, guys. This level through here, if not probably a lot more of a big of a dip, because we're so overextended. And so that's what I see through there, guys, when it comes to Apple there. So yeah, really interesting stuff here. Now the next thing I want to talk about, guys, is something that this just really worries me. Okay, firstly, we're getting record number of people of entering the markets right now. If that's not signaling a top right now, I don't know what is. Right, because the markets, the participants always enter the market in the later stages, right? If you go back to Ray Dalio, the template of all the bubbles in history, basically, what happens at top? One of the six is our new participants entering the market, basically at a rapid rate. So that's what's happening right now, right? There's been statistics out there. I can't bring up the right. There's been a lot of statistics out there that says that the new traders that are into the market, a lot of the money that they've gotten from the government, the JobKeeper payment, have actually gone to trade in the markets. Now, that has also happened, right? Because they think, what does the consumer think? Oh, it's okay. The government's going to keep supporting us. This is really good. We've got all this money coming in. That's okay. Let's go, right? But not only that, look at this here. Now retail's bounced, but consumer credits are tapped out. Look at this here. Let me just bring this up here for a minute. Firstly, I want to bring up this chart here. And I want to zoom in. Let me zoom in on this chart. And I don't want to bring this chart up, but I want to bring this chart up here. This is really worrisome, guys. Like, look at this here. The consumer and debt. So the consumer and debt here, right? So the dotted line is the U.S. house debt, and obviously it's the percentage of the orange line is the percentage of GDP, right? But I don't want to focus on that one. I only want to focus on the household debt, right? Look at this here, right? Household debt goes up through here. 2007, it peaks out. Guess what? It stops. And look at this here, right? And then it started to get back above. Look at this here, right? Right where? Right at 2009, 18, 19. And And now we've actually skyrocketed up to where we are right now. Like, that is absolutely crazy, right? That is absolutely crazy of what we're actually seeing through there. Now, if I bring it up through here, we've got the personal savings rate. So the personal savings rate is the green dash line. So we actually did start to save a lot, but it looks like we're dropping off through here. So it looks like the savings of people has actually started to decline as well too. They're not saving as much. We have the S&P price index, as you can see, compared to these other ones. Consumer price index, compensation employment wage, blue dotted line. Obviously, the compensation of employment wage and salary is obviously dropping as well too. So that's one thing that I want to share with you. Now, the other thing that I wanted to walk you through, which it just really sort of stands out, this one here. So this one here, right? Full-time employees relative to the working age population. So if I bring this up, let me go back here for a minute. You can see that what is critically more important to the economy is full-time employment, which creates enough income to expand the growth, right? So if Trump wants the best economy in the world and it's going to come back harder and stronger and right? The number of full-time employees to the working age population is 44%, which is not high enough to create or support stimulus growth. So we can see through here, right? Look at this here. The number of, now obviously this is because of the CV, what actually happened right now. Number 19, and then the market actually got slammed, right? Obviously because of that, but we're gonna get a bit of a bounce back, right? But there's no way we're going to get back to right here. Recession bar. This is obviously 2008. We got slammed and then we picked back up, right? We're getting slammed right now. I don't think it's gonna get picked back up for quite some time right now, right? We're going through a changing time right now. The next thing I want to share with you here is this graph right here. This is the one that is just like, oh my goodness. Look at this here, right? It is also why, despite the annual hopes of a strong economic growth, the 3-year average of an economic growth continues to deteriorate. With consumers forced to consume more on credit, such will lead to a slower economic recovery. So people are taking on more debt right now. So, okay. Such will lead to a slower economic recovery as the ability to tap additional credit becomes problematic. So they look at this here. Consumers using credit to consume. Look at this. If that is not worrisome to like what is really going on the ground center, this is just crazy, guys. Like right now we're in the middle of a pandemic, a really, really, really bad year. And people are like, it's fine, doesn't matter. Let's load up the credit cards. The government's going to support us anyway. Yeah, it's fine, all right? We're going to keep getting these checks. It's fine. Let's load up on the credit cards. Not good. And that was, I think that was it that I wanted to share with you. Yeah, and the last thing I wanted to walk you through was this one here, right? So if I let me bring up this one here. Right? So this video I did here yesterday. But the one thing I want to share with you is this here, right? So let me just bring up, this comment right. Where are we? This is just so fascinating, guys. And you start to see the writing on the wall well ahead of time. I'm just trying to find that one. Oh, here we go here, right? So this is what I want to, let me see if I can zoom in a bit more. All right, cool. So let me just go over here. All right, so I just want to bring this up. So let's do this here, right? So we can see how that this what's this here, right? This adventure obviously on my YouTube video that yesterday, he said, I just came back from my hairdresser and she made $9,000. Now a hairdresser talking about stocks. Guys, I'm telling you right now, all right? When my brother-in-law, who's a landscape gardener, has no idea what even a stock is, started talking about Bitcoin at 18,000, I knew we're getting close to the top. And guess what? We were, right? When, as Jordan Belfort says, right, and it's so true. When people are talking about this sort of stuff, the writing's on the wall. People along this market are gonna get creamed. Just look at this here. So I just came back from my hairdresser, right, and actually it's really interesting, right, because when Bitcoin was like at 17, 18,000, somewhere maybe 19,000, but probably around the 17, 18,000. When I did go to my barber as well too, guess what? My barber was like, "Oh, have you seen Bitcoin? Have you invested in Bitcoin?" Not only that, but then I'd go to the gym and I'd be in the sauna, sweating it out like a bitch. And the person next to me, he's saying, "Oh yeah, I'm in Bitcoin, and this time next year I could be worth $1 million, or I could be broke. I'm all in." And I'm like, "Oh man, this is a disaster waiting to happen right now." So, Apple stores are closing back down again. Consumers are using more and more credit. More people are loading in, right? When people are fearful, be greedy. When people are greedy, be fearful, right? More people are loading in right now in the markets than ever before. Massive spike. Consumer credits have been now doing that. And now, and I just came back from my hairdresser and she paid $9,000 an airline video recently, and advice from friends, right? On advice from friends. I guarantee you their friends like, "Oh, you should be buying airlines right now." What? Right? Oh my God, I told her to put, a stop loss in if she doesn't get out. She also bought Hertz as well. You know what? She's probably gonna, even if she does get out of that, there 9,000. Guess what she's gonna do? She's probably gonna load up that whole lot, and if she makes a lot of money, so she's probably going to load up on, because she got lucky. She's probably going to, even if she does get out, if she, say for example, she made $9,000. So let's just say she put 10 grand in, right? She put 10 grand in and then she made 90, and so she got $19,000 there. And let's just say she gets out at that $19,000. Guess what's going to happen? She's going to go, "Oh man, this is easy. I'm going to go do it again. I'm going to load up again. I'm going to open the whole 19,000. And then guess what? She's stuck in that thing for 6 months watching it go down to zero. Or either she gets into a company like Hertz that just completely goes bankrupt and then disappears, right? What happened to my stock? Sorry, And look at this here, right? And what I wrote here was this: your hairdresser is trading. Yep, we're at the top. And guys, it's so interesting, right? Because when we start to look at all these markets, look at this here, guys. I'm telling you right now, like, if all these warning signs we're seeing right now in the markets. Technically, yes, but technically we can see we're at right now, okay? And the big picture technically doesn't look good as well too, right? Big picture technically says that we could be forming one massive topping pattern right here, right now. And what I mean by that is this. Let me bring up, say the Dow Jones, and I'm going to bring up, say, the monthly charts here. So look at this monthly chart here, right? Or even just the weekly charts. Okay, so we can see through here. Now, guys, this is not guaranteed, guys, but when you start to put this together, right, we had this bit of a shoulder here. We've got a head. Looks like we're probably going to form some sort of right shoulder here. We had this low, major lower low. Even if we do get a bit upward movement, guys, I don't see new high getting in Dow Jones. I see something like this happening at least. And then next year, oh, man. So, guys, the writing's on the wall that we're forming one massive topping pattern here right now when it comes to the markets. And if all of what I've said here, guys, the Apple, which is one of the biggest ones out there, is now closing down stores again. We have record number of people of entering the markets. Record number of people losing a lot of money in the markets right now as well. We have people using consumer credit. We know the virus is going to come back again in a vengeance. We know the opening is not going to be as strong as the market says it's going to be. AKA Nasdaq and so on and so forth. And then on top of that, we're now using now people are loading up on more debt than ever before. So there's a lot of using debt there. And then on top of all that, now you're seeing the signs of hairdressers being involved with the markets. Guys, if this doesn't scream one massive top, and I'm not saying it's going to be the exact top today, no one knows, right? What I'm saying right now, over the next 6 months, we're probably going to continue that top, and then 2021 is going to be a very bear market, for the overall stock market here. And I would not want to be long at all in the stock market right now. Now, I am long on some stocks, but when I say not be long at all, guys, there's going to be amazing opportunities, right? So I think like some of the mining stocks and silver, gold, I think they're going to be some really good long opportunities. But when it comes to the stock market, guys, once again, if this doesn't worry you, I don't know what will. And so, guys, make sure you head on down, just grab that $7 trading course, guys, and just start to go through this here. Especially the top biggest mistakes here, guys. This is going to really help you when it comes to your trading right now. So, again, guys, I'm going to say this again. You know, the writing is on the wall. When you start to see the big picture here, guys, people that think we're going to go through another big bull market, no, we're at the top of the markets, guys. Now, I'm not saying today, but I'm saying where we are right now, the last 12 months, you know, last sort of 6 to 12 months, we're building a massive top pattern here. It's all over the place. The writing is on the wall massively right now. So, guys, moving into the rest of this year and into 2021, we're probably going to have a pretty bad year. But I would say, guys, through 2021 and 2022, we're probably going to have bad years. But be excited about that. Why? Because one, I make so much more money in a crash anyway, and a bear market, so I'm excited for it. And also that it's going to create, after say 2022, I believe. We're getting ready. We're going to get ready for another big bull run, another big bull market. So just make sure your powder's dry and you're educated and you're doing your analysis and you're doing your research and you're looking for it. Like same with me in property, right? I know here in Australia we're probably going to go through a similar thing. 2021 is probably going to be probably a pretty bad year for us. We're going to go through a bit of a rough time, but 2022 to probably 2026, that's my time frame. 2022 we're probably going to start the bottom out. I would say 2022 to 2026, we're going to see another big, massive bull market here in the property market, and possibly even stocks as well too. So, guys, once again, if this doesn't worry you, nothing will.